How safe are life insurance companies? Extremely. In this episode, I'm going to share with you how they weathered the Great Depression with flying colors, how they came through 2008 when many banks went under, and why they would be the last domino to fall over if things got horribly, horribly bad and the American dollar became worthless. You ready? Hopefully you'll gain insights and feel comfortable with their safety like I do. So I'm Doug Andrew. I've been a financial strategist and a retirement planning specialist now for 5 decades, helping thousands of Americans optimize their assets, minimize taxes, and empower what I call their authentic wealth. Now, my favorite financial instrument, without question, that allows one to accumulate their money totally income tax free. And then you can access that money income tax free. Every $1 million you accumulate can generate a 10% payout, $100,000 a year of tax-free income if you live to be 120 without depleting your nest egg. And then when you ultimately die, anything you leave behind in this blossoms, increases, and transfers income tax-free. That is a properly structured, max-funded index universal life. So these IULs have to be structured correctly and funded properly to be deemed what I call a L.A.S.E.R fund. And that's the title of my most recent best-selling book. And so what's a L.A.S.E.R fund? Well, it is an IUL, but over 99% of IULs would not be deemed a L.A.S.E.R fund. And so you need to know the difference here. And it all comes in how it is structured to do what I'm talking about here. But then a question that I get asked, well, how safe? How safe are these life insurance companies? My short answer is extremely, okay? Well, let me expound on that. The legal reserve insurance industry, okay? Now, most insurance companies are legal reserve companies. That means they have legal reserves, money they have to have reserved on hand, liquid and safe, in case there is a run on their institution or the institutions, banks, credit unions that invest a lot of the money on deposit in banks is put into insurance companies. So if there's a run on the bank can get their money out of the insurance company to give their depositors, okay? They have to have legal reserves that are far more stringent than the reserve requirements of a bank or credit union. And that's why banks and credit unions put 30 to 40% of their tier 1 assets. A tier 1 asset is money that they have to have on hand, liquid and safe in case of a disaster, a run, okay, a crisis. So they put it in insurance companies. You got it? Now we learned this through 2 crises. Let's go to the Great Depression, okay? Now, in the Great Depression, 80% losses were incurred on some real estate. So some real estate dropped 80% in value. Banks closed. 40% of those banks never reopened their doors, okay? Now, who came through the Great Depression with flying colors? Not one single legal reserve insurance company went under in the Great Depression. They came through crediting usually 2.5%, 3.5% interest, okay? Because they have these legal reserves. Let's fast forward to 2008. Now, in 2008, we came so close to a financial crisis where David Walker, the Comptroller General of the General Accountability Office, actually resigned from the Obama administration because he was not allowed to tell the public how serious of a situation the country was in. And so we were on the verge of financial collapse. And that's when we had 400 banks go under in 2008. 900 more were on what is called the watch list. They were on the brink of going under or collapsing. And that's when the federal government asked the 5 major banks in America to disclose where they had their tier 1 assets. That's money that has to be on hand, liquid and safe. Their tier 1 assets for liquidity, the ability to access it with an electronic funds transfer or phone call, and safety. Guess where the banks and credit unions had 30 to 40% of their money? Legal reserve insurance companies. Hello? Now, let me just tell you behind the scenes what they were doing. Banks in 2008 were paying how much interest? Less than 1%. Let's give them the benefit. Let's say 1%. Every $1 million of OPM, other people's money, that people put into banks, the banks only had to pay them 1% interest. That's $10,000 on every million. So far, so good. They would take a lot of that money, and that million they would put over in an insurance company. They would earn the general account portfolio rate in the insurance company, which back then was 5%. They didn't even have to link to an index. Wait a minute. They borrowed money at 1, and they earned 5. How much more is 5 than 1? Don't say 4, please. It's 5 times. It's 500% more. It's a 400% profit, but it's 500% more. Would you hire an employee for 10 grand if that employee made you an extra 50 grand? Or would it save you money by firing that employee? No, it would cost you money. Would you buy a widget machine for 10 grand if that widget machine made you 50 grand, 5 times that? Or is it saving you money by getting rid of the widget machine? No. Are you beginning to understand how money works, okay? So insurance companies, that's where the banks and credit unions put 30 to 40% of their Tier 1 assets, and they increase their rate of return by 5 times, 500%. They increase the safety by usually 5 or 6 notches higher. Many of those banks were rated triple B by, let's say, S&P, okay, Standard & Poor's. And most of those insurance companies, they put your money into are rated AA or AAA. The difference between AAA and triple B is 6 notches higher in safety. Well, why don't you just bypass the middleman, the bank, and increase your return by 500% and the safety by 6 times by putting your serious cash into the insurance company instead of putting it in the bank and let them pay you a measly 1, and then they get to make 5 times that and increase the safety. Are you getting it? So that's why I like to put my money in IUL and max funded insurance and insurance companies. They're extremely safe. They weathered the Great Depression with flying colors, 2008. But let me just shoot straight with you. A lot of times people will ask me, well, what if? What if the American dollar totally collapses and becomes worthless? And I just go, well, hello. If the American dollar became worthless, first of all, I would have had a lot of forewarning with my money in the insurance companies. It's the backbone of America, the backbone of the world. And just like any of these other periods, the Great Depression or 2008, you saw all these banks failing. That's a pretty good signal. Get your money. Get your money out and convert it to groceries or whatever, food. I would have plenty of forewarning when the banks start failing. And so when I start seeing that happening and start seeing real estate plummet, if you're still sitting with money there in the insurance company and all of a sudden somehow the insurance industry went under, let me tell you, not only is it the backbone of America, it's the backbone of the world. This is where governments go to for help. The American dollar would become worthless. And so if you left your money in there that long, because frankly, if you pulled out your money, where would you put it? Are you going to take your money out of an insurance company and put it into a bank? No, that's where banks put their money for safety. Well, hello? You decrease the rate of return and the safety. No, so what would you do with your money? You better put it into, growing carrots in your backyard. So if the American dollar becomes worthless, what good does it do to have your money if it's worthless, okay? I put my money into insurance companies because it's the last domino that would fall if things got really bad, because it wouldn't matter if I had my money. Does that make any sense? And if it comes back, they are the ones who will be the first to be resurrected, so to speak, okay? And so quit worrying about things that you can't control. But if you want to control your money, leave it in an insurance company, and you'll have signals of the banks and credit unions go, then you get your money out, but you better convert it to some wheat, some gasoline or something that you can barter with, because the American dollar, if it's worthless, it doesn't matter if you have your money. Does that make sense? So many times people use what ifs that are so ridiculous. It's like, well, yeah, if the American dollar is worthless, why are you worried about your money when it's worthless? You have to convert it. Does that make sense? Now, if you want to learn more about safety, this is one of the critical pillars here on the front page of my book. This is liquidity. L.S. is safety. And the reason why I like a property structured laser fund is because it passes the safety test with flying colors. So if you want to study this book, it's been flying off of our warehouse shelves. And you can purchase it on Amazon for $20 up to $60. If you do that, thank you. But I'll gift you a copy of this 300-page book free. You simply go to laserfund.com or click on the link below. You contribute a nominal amount toward the shipping and handling. I require a little bit of skin in the game. And then I'll pay for the book. I'll fire out a hard copy to you via priority mail. That was actually 2 books in one. This side, about 200 pages, 14 chapters with all the charts and graphs and explanations if you're a left brain learner. If you're a right brain learner, you learn more by stories and examples. You flip it over to this one. This is 2 books. This one is about 100 pages, 12 chapters with 62 actual client stories, okay? If you want to use your whole brain, your right brain and your left brain, you can read both of these books. But it will be life-changing if you implement these strategies. Now, when you're in there claiming your free copy, if you like to listen and learn or watch and learn, there's those formats you can invest in. You can even register for a free educational webinar that we teach on a regular weekly basis. But you can also schedule an appointment with an IUL professional that's certified, that I have trained, so that they can show you how these strategies may apply in your particular set of circumstances with an IUL designed correctly. Because over 99% of IUL in America is not designed to do what I talk about on this 3-dimensional wealth channel. I don't want you to make any mistakes. I want you to be able to earn 11 and net 10. I want you to have the utmost liquidity, safety, and rate of return. That is liquid assets safely earning returns. That spells laser. So let us help you have laser focus on your serious cash.